Hi, everybody. Welcome to F.A.C.E. Welcome to seeing Steve's charts. I'm going to share mine unless Steve wants to do it now.
There you go.
Sure.
Dale, extend your microphone.
Broadcasting style.
Testing.
We can hear you well, Blake. Good morning, everybody.
Yes, we can hear you just fine, Blake.
Hey, yeah, it's weird. The way that Zoom launched today, it launched the wrong audio. So how are you guys doing?
Hey, guys. Hey, how are you, Blake?
Good.
Okay, now you fixed your microphone. Perfect.
All right, perfect.
Okay, yeah. So, good morning.
Good morning.
I'm trying to share my screen. I don't know how to do it from here. I'll just do this then. Okay.
Somebody's definitely sharing their screen.
Okay. Well, do you see the traders
Yeah.
funding program up there?
Yeah.
Okay, I'm good now. All right. So, good morning.
Good morning.
So, a little bounce in the metals. Something I wanted to start with, Blake, maybe the Aussie has bottomed. You had like 2 little tests and, they made marginal new lows. It's acting pretty good here. What do you think? And I know that Kman also probed it yesterday.
Yeah, I'm long.
Yeah, nice. So what are you looking for on the upside? You just don't have it.
In the short term, I'd be looking at somewhere 68.70 or 69. The figure. Then the more medium term is the jury's still out, in my opinion. A lot of people in the room are long Aussie in some way or shape. Some straight versus dollars, other long versus euro, and everything is working. Everything is working pretty well. So
yeah,
it's a nice team effort.
And also looking at Canada, it's coming off. I don't think it ever took out that prior high. Close, like a triple top. So
yeah, very close.
Yeah, so triple top there. Pound outperforming euro. Any comment on that? We didn't quite get down to this wedge line.
Yeah, I mean the story finally has its result. Boris Johnson resigns. He's looking for a new head to come in latest October, but I reckon the Tories will try to speed things up a little bit. So we had this the relief rally. We had the sell the rumor, buy the fact kind of rally. So sterling rallied about 40%. And yeah, I mean, euro sterling dipped below 85 into this 84, 80, 85, the figure support area. I think, I don't know if Stel went into it, but I know that Ryan is giving it a go there to try to buy this setback on the euro sterling.
I would guess Ryan's looking around 84.5 to maybe.
Well, no, he actually dipped his toes in already this morning. He's not going to be with us, by the way, because he's off for a few hours this afternoon. But no, I know he did. We were like questioning on the flow show the viability of this relief rally. So can
Okay, you think it'll fade?
Well,
I heard that Boris Johnson, after he resigned, signed up for the trader funding program.
That's very possible.
That's going to be his new career.
He pays.
Can you guys confirm that for me?
Yeah, I sent him the paperwork. He's going to pay $1 million for a $100 account.
Oh my God! And you use my link.
It's yes, I did, Dale. You know me.
Right.
I mean, I'm always supportive of whatever you try to do.
All right. So dollar. Any levels on Dixie? I mean, on the daily, we're still, we haven't made a new RSI high since all the way back here in late April with successive higher highs. I know it's tough to fade the dollar, especially the euro looks the weakest. But if Ryan's going to be right about euro pound in here, then I think we're very close to a top in the dollar and also a low in the euro. I don't think it's going to work in a continued strong dollar environment. I think it needs a weak dollar environment with the euro leading the pound. So if you like EG, it's hard to be bearish euro.
Well, unless cable craps the bit.
Huh?
Unless cable craps the bit.
Yeah, that good point. Bouncing copper, you know, we got down to 320.
So
and
yeah, we had a bit of inventory
average
news out in copper. We had lower inventories this morning, and together with the ticks that have been shown, copper cent is trading quite a bit higher this morning. What is it, about 3-4% high, up this morning? So yeah, it also helped the rebound in the Aussie.
Yeah, because I wanted to show this because when I was negative up here, this was the target. Okay, around 320. The moving average was the target. So it went right to the weekly 200. No divergence down here, but you know, we could have one of these rip roaring short covering rallies, maybe back to $4. You know, to resume a bull market, you probably have to get back over 4.
Yeah, yeah, absolutely.
$4 to $5 range, breakdown under 4. I wouldn't be short copper anymore. So
great call, that one.
So what about translating this into risk into stock indexes? You know, they've held okay. I still know some guys that think there's going to be one more low before there's a better rally. Any input on this?
Yeah, I mean they're holding well. I mean I don't really have too much to say about it, but they did hold pretty well. Reason for it, I don't really know. Perhaps they've been supported with the better than expected services PMIs yesterday on the S&P Global services PMI and the ISM. They seem to they seem to find reasons actually to hold up pretty well.
This may have been the reason here, and you know, I want to just show this. This is a bull bear line in the sand now, okay? And that was, I think, you know, guys were calling this wave 4. So for this to have really been a top, you needed to take out the low of this pullback here, and it didn't happen. Okay, it held. And see this RSI reading up here? There's a possibility that this is a low in rates and that we're going to start heading higher again. And maybe, you know, like Fed guy, 4%, 4.25 into year end.
I think it is possible. And in the meantime, as we have been doing, when we came off from those highs, then we paused into the Fed meeting, right around what was it, around 320, 315, something like that. We paused around there. I think we might do the same, roughly around 3%, going into the next meeting, perhaps, like trade I don't know, 280, 320 into the meeting. But again, just for info, I've seen some big actually asset managers and funds saying that the moves in rates, the yo-yo in rates, is something that they have very, very rarely seen.
They call it Banana Republic type
right?
Debt markets.
It's crazy if we think about how much money is linked to bonds and thus only the 10-year, which is used by the whole world. How much money is linked to it, and then you see 20 BP moves in the space of an hour and a half. It's gigantic, actually.
It is, yeah. So anyway, you know, the other possibility is if you're right and yields have peaked, then maybe we rally up to here for maybe some type of right shoulder. But you know, the TLT had a very nice rally but I don't know if I'd be long bonds from here anymore. This could have just been another bear market rally. So
Unless it breaks 120?
yeah, that could be it.
Oh.
Okay, so also Bitcoin hasn't made a new low for a while. Okay, so this is a confirmed low, but it looks like we're carving out a higher low here. I know Blake's a lot more active in following crypto, and wondering, Blake, if you think we could get a rally back to 25,000 here.
I'd be a seller on a move like that.
Okay.
We had this. It's also a bear flag pattern setting up, but I don't know if it's going to push lower. I think we have to take a step back and realize how big this 20,000 level is. I mean, that is the 2017 spike highs. Well, it came in, 19,666, I believe, is the number.
Your mic sounds perfectly crystal clear today, too.
Oh, thank you. We made an adjustment yesterday, and it seems to have done the trick. So I'm glad, because yesterday I was a little worried. Every time we get an update, it kind of rearranges the settings on the microphone. So anyway, I'll take over and I'll show you where.
One last thing.
Yeah, go ahead.
Bull bear line and crude. A few weeks ago, I don't think many people thought we were going to get back to this descending triangle line. I don't think it's a good sign that it got here. We could rally, but closes under 94 with this major support and moving average confluence. Under 94, I think you can see $80 to $60 crude.
It's the recession trade, right?
Yeah,
that's what it is.
Or Biden not coming home empty-handed from his trip to the Middle East next week.
Well, let's talk about a few things really quick.
Go ahead, buddy.
regarding crude. But I'm going to first go back to Bitcoin. I just want everybody to see this is like the big level, right? I mean, that's it in Bitcoin.
Yeah.
I think we're going to eventually break. I think we're going to eventually break down. I don't know if we're going to do that here within the next let's just call it couple months. I think that you have to sell rallies now. Any move up to 25,000 or any move up to, maybe 28,000, somewhere in that neighborhood, you have to sell into strength there. I think that we are eventually going to be moving a lot lower.
It's broken because of all the not being able to get your deposits out of a lot of these crypto brokerage firms, and so I mean that kind of has a lingering effect on confidence to come back into it, doesn't it?
I'd say yes, and I'd say there's the difference between here and every other upcycle that we've seen in Bitcoin. Do you know what the big difference between now and let's just say 3-4 years from now?
Yes, monetary policy.
And the involvement in Wall Street, I think combined, right? You take monetary policy and the shift in monetary policy. That's a big one. Obviously, it's just kind of and all the excess money that's sloshing around is being taken out of the market. Yes, that's a big one, and also Wall Street's a player now. And that means there's been a lot more institutional investment. And unlike, hodlers in the market, Wall Street has a different perspective on their investments. They get the heck out if they need to. I'm sorry, it almost came out. It did not. It did not.
No,
but do you understand what I'm saying? That hodlers will just sit in it and they'll be like, oh, this is my forever trade. I'm going to retire on this.
There is one exception, Blake, just one exception. You know who is a Wall Street person that is obviously a hodler instead of an investor, right? Cathy Wood.
Oh, yeah, but you get institutions have to they have people that they have people to report to. and boards to report to and funds to protect and monies to protect. So, you know, if an investment or a trade is not working out, or an industry for that matter, they're just going to get out and they're going to take it down with it. So this overinvestment in the crypto space, I still think has a lot more pain to go. So anyway, I just want to make that point clear regarding Bitcoin.
They're holding on for dear life. They're in the trauma center.
Yeah, right.
Anyway.
They are, and it's probably going to continue to get worse. So I'm not saying it's going to be today. It's just you probably want to continue to sell rallies for a while. Let's talk a little bit about. Let me find it.
I heard you were talking copper last night. I saw a tweet in your shootout or whatever they call it.
It's called the trade-off. Yeah, let's
I like shootout, Blake. Don't you? You're a Marine.
It's not my show. It's not my show. I'm a guest. You know,
shootout or workout. Yeah, I like that.
Yeah, like the trade workout. I don't know, but good one came in.
And by the way, guys, we have a lot of data coming at the bottom of the hour. Just a reminder, right?
Yes. Yeah, and actually, do we just have ADP?
No. There's no ADP made this month.
Oh, okay, great.
August again.
Okay, great. So, talking about crude, and Dale, since you mentioned the trade-off, last week actually on the trade-off show, I said, you know, crude's a good short from the underside of that trend line, and it failed right where it should have. Now we are getting really close to the 200-day moving average here. And I think it's all about the recession trade. This is it, you know. And also, speaking of which, Chris Weston, he made a great point about the whole Russia, crude oil, trying to limit the dollar amount to $40 to $60. I think that U.S. allies was going to cap Russian oil prices. The problem with that is they could get a really big. If they get a retaliation and Russia just cuts production like crazy, then next thing you know, we've got, Brent and also WTI ripping. I mean, we'll be past those highs if that happens. So, yeah, we got to watch the headlines from Russia in the event that we try to cap oil prices, is what he was saying, and I agree with that. So, but the flip side of that is if crude oil slips below this $93, I think it's more of and the 200-day moving average, it's more a recession trade, like that we are going into a recession, and this is how people are going to illustrate it. I think it's still a little too early to call, but the jobs report tomorrow is going to tell us a lot about about what is, how quickly we're stepping into a recession. And I want to mention something else that we talked about last night, and
don't forget jobs are a lagging indicator, right?
Yeah, they are a lagging indicator. I believe that we're already in a recession, Steve. That's not the point. The point is, I believe we're in a situation where weaker data is actually positive for the markets. So I don't think that this NFP is going to be too bad. But
speaking of which, Blake,
Steve, can I finish my thought real quick?
Yeah.
Okay, thank you. I think that the jobs report is going to suggest that if we get weaker jobs, you're going to get the market that actually cheers that type of move. So be aware of that as we go on a non-farm payroll. As I said, I don't think that the jobs report tomorrow is going to suggest or show a weaker number just yet. I still think we are a month or two behind, as Steve just pointed out, that it is a lagging indicator. Steve, did you want to add something to that?
Yeah, Atlanta Fed, for those that haven't been paying attention, right, has finally a few days ago revised their assumption about second quarter GDP to negative, right, and not to slightly negative, to -1%.
No,
so basically,
actually -2 already.
Oh, they revised it again to -2. Okay, so we've been saying that since since we got the first quarter numbers, and I remember that the assumption for second quarter GDP started from positive 2.1, which was a joke, right? They've revised it downwards probably like 15 times already. So the chances that we're not already in a recession are now practically close to zero, right?
So Go ahead, Dale.
No.
Okay.
Yeah, go ahead.
Thanks for the input, Steve. I appreciate it. I wanted to also talk, and since we got Kman here, we don't have Ryan. Ryan had to step out for a few hours. So what do we make of Boris Johnson stepping down? I mean, I know it's a clown show, and I know we can make a lot of funny comments, but I wanted to pull this up really quick, and I'm going to ask you a couple questions about some of these folks. But what do you make of it, Kman, since you're boots on the ground there in the UK?
No, I think it's what I said before. I'm not sure it's a positive we had the relief rally by the fact of studying the rumor for multiple sessions, and no, I'm not sure it's a positive fact. Okay, we may have a little more to go in the sterling, depending on the positions, depending how the dollar trades. But I don't see the outright positive about it, unless taking away some uncertainty in the fact that he's gone.
Politically speaking, what is the main case scenario at the moment?
Well, he's going to. They're going to choose a new Tory leader, right?
By October, right?
Well, I think they want to speed it up.
Of course. I mean,
so the. Truth is in the running.
Any chance of Piers Morgan getting in there?
Sorry?
Dale's that's the only person that Dale knows from the UK. Just kidding, Dale.
No, you're right, Blake. Yeah.
I know. It's like Elvis Presley, Piers Morgan. Who's going to be the next guy? Hey, but who's Penny Mordaunt? Who's this?
Don't ask me those kind of questions.
Okay, all right. So I asked. I was saying something in.
But I know who Piers Morgan is.
Okay. I was saying in the chat room in our chat room saying that I was asking about Sunak because I knew he used to be the finance minister for Boris Johnson. I was thinking, oh man, that would be positive because I knew he was well liked. And Mark said, yeah, he's shot himself in the foot when the stories about his family wealth and his wife avoiding taxes. And I was like, oh yeah, that's not gonna.
And at the same time, he was saying he said everything in the opposite. To be perfectly honest, personally speaking, I'm not sure if it really would be positive for sterling because he's ready to tax companies to pay for everything. So I'm not sure it's going to be that positive for sterling, apart from him being a liked and younger person.
Yeah, a couple of people chimed in and says, "Don't worry about Mordaunt. She doesn't have a chance." And Simon says, "Penny is the least dirtiest one in the basket, but no one knows about her." And that's the thing. I ask myself, should I be buying the sterling right now? And the answer to that question is no, until we know who the leader is going to be. And then I do think that will remove the sense of not knowing, and markets don't like the unknown, right? So once we know who the leader is going to be, then we can think about buying the sterling. But how aggressively will depend on who the next leader is, and when does that happen? So the question goes to right now. The sterling is probably going to continue to be more of a risk proxy, just like everything else is in the market. Like, if you're looking at the Aussie or you're looking at the, Mexican peso, whatever you're trading, it's just probably going to move more in line with that. So the question was, right now, is this the time to be buying the sterling? And, I guess it depends more how you feel about risk. But speaking of risk, I want to point out a chart that I think is very important. This is my, I made a big fuss about it yesterday when we were in the chat rooms yesterday because we had a hammer off the 161% extension. I went on the trade-off last night in Australia with Chris, and I said, this is my trade of the day here. We're up about 3% right now. But the question I want to ask is, how's that going to affect risk? What do you guys think? I mean, I think the commodity trade is way overdone. I feel that everybody assumes we're going to be in this nasty recession. They're pricing it in. That's why we've had. I mean, copper is down 20. This is a 28% move.
Yeah.
That's a 28% move in copper. Then you look at all these other, commodities, and I know nat gas has its own special reason why it's down. But you take the wheats of the world. You take soybeans. You take cotton. I mean, these markets have sold off really. Whoops, that's not what I want to point out. Really aggressively here, and so I believe that we don't have enough information yet to suggest that we're going to have that nasty of a recession. So the reason why I think some of these commodities can bounce and also risk can bounce is that as a result. So do you guys have any thoughts? I know Stelios isn't here; he's still sailing in the Aegean Sea somewhere. But Steve, what do you think about? Oh, well, Steve, you're going to be Debbie Downer, so you're last. Kman, what do you think?
No, I think the market swings. We were talking about those yields as well before. The market swings so hard in all the commodities and in the yields, and they're trading from recession into everything is going to be all right, and then and it's just swinging. And yes, you pointed that copper out, and as Dale was pointing out as well, and it went down to a support, and it bounces off the support. I think we can range maybe a little bit, and Dale is correct in saying it needs to go back above $4 to call the whole thing over. Until then, we may just range.
Yeah, great trade up to there from where you called it. It's big trade.
Yeah, I mean that's a big move, right?
Yeah.
As we were saying, you look at data, and the data will tell you whether this thing is going to go more south or go back up. If growth is not sputtering too much, if we see light at the end of the tunnel, this thing is probably going to shoot higher again, same as the rest of the commodities.
Yeah. All right. Well, let's bring in Nouriel Rubini. Steve, what do you think about recession risks here in the U.S. and globally?
I've been clear about that since the beginning of first quarter. I think it was unavoidable because what was keeping things alive was the extremely stimulative combination of monetary and fiscal policy, and those two are going away. So, we said since the beginning of the year that a recession is extremely likely within the year, or worst case scenario at the beginning of next year. It was actually the faster solution. Now the question is, Powell, of course, initially denied the possibility of a recession coming. Then they kept denying it after we got a negative first quarter, thinking, that for some reason we're going to have a rebound magically. Now they are more or less acknowledging the possibility of a recession, but they're saying that there is they believe that the second half of the year is going to be very strong. The question is, based on what? It's going to be very strong based on what? I mean, based on what evidence? In my opinion, this recession is just probably beginning, right? I see no reason, with inflation being high and hence central banks being forced to continue the same policy, I see no reason why we would get a rebound anytime soon. In fact, I think that once we see the job market turning south as well, recession is going to actually accelerate. So
okay, Dr. Doom is in the house.
Yeah, but wait a second. Dr. Doom has been right so far, right?
No, he is. I'm just, I don't want everybody to go outside and shoot themselves in the head is what I'm trying to avoid, Steve.
But on the other hand, it's better we have a realistic assumption of what's happening here, right?
I know. Dr. Doom is not good for TV, but it is realistic in what is happening, and that is unavoidable. So, Steve,
you interview the real Dr. Doom.
I haven't. Did you interview Nouriel?
Have you ever interviewed him?
No, I thought the other guy was.
No. But no. I mean, I'm joking. That's why I had to save that for last because we have to cover this data coming out. We do have weekly jobless claims that are coming out. I want to say that jobs matter now and data matters, and that's something that I've been trying to reinforce recently. Over the last several months is that we really need to start paying attention to data because it does matter. And it's mattering because it's monetary policy is fluctuating. And what the hell happened?
I like what Lakshman said. It's now the Fed is nowcasting instead of forecasting. They're nowcasting on every piece of data.
Yeah, they are, and that's because they're behind the curve, man. They're still playing catch up.
Can't hit a curveball, those guys.
Yeah, they can.
You
Anyway,
gotta sit on it.
10 seconds.
So yeah, thank you, Steve. Just a few seconds till data, and we have the S&P on the left, the dollar index on the right, and trade balance in Canada better than expected, U.S. worse than expected, and
Oh, there you go.
jobless claims are starting to weaken just slightly, but that's not enough to really move the needle.
No, it isn't.
No, when you
But-
start
but in-
seeing those jobless claims like hit or miss by, let's just say 40 or 50,000, that's when you start getting
Yeah,
reaction.
but in essence, if you look at the chart, Blake, it seems like we've already found the low. It's like we're carving some kind of a rounded bottom in jobless claims. You know
Sure.
what
I mean, it as you pointed out, it's a lagging, employment is
Yes.
lagging, and what we're going to see is that number is going to increase towards 400,000, I would say, by the end of the year.
Let me also add something about jobs here, Blake. A lot of people don't know that, but a lot of the data that government gets out are based on assumptions. One of the assumptions that also affects very much employment data, and we've seen that back in 2008 when they had to revise things a lot later on. For those that don't know, there is a thing called the birth-death model, which is like the government makes assumptions on how many companies are being created and how many companies close down in advance based on other indicators, right? And they make assumptions of how many people they hire. So usually when we are in a brink of at the beginning of a recession, the birth death company model is completely off and also affects employment data. So keep that in mind.
Yeah. All right. Sounds good. And Dale, I know you have Larry Tantarelli here. He's he's a really fun guy to have around, and he's really good at stock selection. I really enjoy spending time with Larry myself. I just want to say,
Don't
everyone,
make me
thanks
jealous, man.
Huh?
Don't make me jealous.
I know.
We share all these people.
Okay. I like you, Dale, more. How about that? All right. I said it. Sorry, Larry. I like Dale more. Just make sure you guys check out the Trader Funding Program when you get a chance. We had, like I said, just yesterday, we had 2 traders access live trading accounts yesterday. Volatility's been good. And when volatility is good, that gives more opportunity. So if you want to learn how to trade our money and keep 75% of the profits and take no risk, go down to the very bottom and watch this 2-minute video. And
Don't quit your daydream.
And don't quit the daydream. That's right. All right.
Thank you, Dale.
Dale? Thank you.
Okay, guys.
Thanks,
and you know
K-Man.
what?
Thanks,
You know
Steve.
what?
Dr.
Steve,
Doom.
You guys.
Team, the great resignation may turn into something else after people paid 50% more for their vacations in the fall and look at their credit card bill. They're going to have to go back to work, a lot of these people, I think.
For sure.
Anyway, so Larry, my trading warrior brother, welcome back to F.A.C.E. Larry, how are you? It's been a while.
Dale, good morning. Blake, good morning. It's okay that you like Dale better.
Anyway,
Good morning, Larry.
I'm
Hey,
insecure, and I need validation. And in fact, I have ADD, attention deficit disorder. I can never get enough attention.
Gotcha.
Anyway, so
we're here. We are
anyway,
here.
Larry, really a severe decline in the last several months. They took out different groups and shot them, and the last group to get hammered were the oils in the last few weeks. And are you going to share your screen, buddy?
I will. Let's jump on to share screen. Let's go here and let's go there. Okay, can you see my screen?
Got it up there, Larry. Yeah.
Okay, so you see my Twitter page. So we'll get started. Let me know when you want me to get started.
Go ahead.
Okay, so I brought some charts with me, but the first place that I want to start right now is with the Fed, the bond market, interest rates, because I think that we can all agree that what's driving the markets right now are inflation expectations, the Fed, rate hikes, and the bond market. So right now, a key thing that I'm focused on is what's the Fed's course of action. So their next meeting is July 27th. Right now, the futures market is pricing in a 93% chance that they hike rates by 75 basis points.
Okay.
So CPI is next Wednesday. I don't like to make predictions, but it's good to have a baseline view. And I think that CPI is going to come in high. It might not come in higher, but I don't think that it's going to come in on the low side. And I think that
Nothing
once
to let them off the hook from their planned interest rate.
not at all. Not
Okay.
at all. You know, the PCE came in, I think it was last week, and that dropped 20 basis points, but the month over month PCE actually went up. So the Fed's hiked 150 basis points in the past few months, and what they got was a 20 basis point drop in PCE. So I think that there's going to be some disappointment for people that are expecting CPI to fall off of a cliff next week. Now, I could be wrong, but that's what my expectation is going into next week.
How long will it take, Larry, for, say, for example, gas prices fall with the price of energy in the last few weeks, for that to start to show up in the numbers?
You know, it's tough to say. So the CPI is a month at a time. So oil fell off of a cliff this week. So that's definitely not going to show up in the June CPI because that's already closed. So possibly it starts to show up next month. But keep in mind, there's a lot of other factors, you know, besides energy. Energy and food,
of course,
are two of the biggest ones. But the key thing also is there's a difference between peak inflation coming down and their targets. So maybe, you know, maybe we don't see over the peak, but I don't know that I expect it to fall off of a cliff just yet. And if it does, you know, we'll find out next Wednesday, and then we can adjust from there. But I'm going in from a risk management perspective. I think the bigger risk is if you expect CPI to be low and it comes in high, there's a lot of risk. So to be on the safe side, I'd rather expect a big number. And if we don't get it, then I can adjust from there. But I want to cover my downside.
Okay. All right. So is there anything to be long in these markets? I know, you know, you played the bull market like a maestro, okay, all the way up. And I'm wondering what the shift in strategy is, less buys, any short selling. How are you navigating this 20% decline, 30% decline in NASDAQ, et cetera?
So my positioning right now, I've been short NASDAQ since the beginning of May. I just shorted the energy sector on Friday with ERY, and I posted that on my Twitter page. And then I've got small longs in China Internet. So let's bring up some charts. We'll go here. So current positions that I've got a lot of cash right now. So I'm short triple Q through PSQ. And basically what my view is here, and we'll take a look at triple Q in a second, but if we take a look at the PSQ chart, which is just 1x inverse triple Q, it's just in an uptrend. So if we look at the chart, over 3 rising moving averages, you've got 4 rising moving averages total, pulling back over the 50-day, higher highs, higher lows for the most part. So this
looks like there's 2 drives there, Larry. If you go back to the highs in May, and then that's like 1, and then the highs that we had in June is 2. Right. And you know, I like 3 for completion. That would imply 1 more high coming in this, which means 1 more low for NASDAQ, right?
Could be. Yeah, could be. What I think, if you look at triple Q, just the opposite. So for me, this is just a downtrend. You know, lower highs, lower lows. It recently tested a lower low below 4 declining moving averages. Hasn't been able to get over the 50-day moving average as of yet. But here's what it really comes down to, I think, is it comes down to the CPI next week in the short term. So if the CPI comes in high, then I think that stocks probably have a lower low on the way. Yeah. Okay. Just based on, and I think there's a lot of, you know, when I look at the media and I look at social media, you know, there's a lot of positive expectations that inflation is just going to come in really low. And I think the downside is if it comes in high, I think that there's probably lower lows at triple Q and S&P. So I'm short triple Q through that. I'm
Okay, got
long
it.
ERY. So I just started this position on Friday on the members website, and this is just 2x short XLE. And what I see with XLE, and you know, I was in the energy sector for about 18 months, and I
Yeah.
was fortunate enough to
What a
lock
ride.
in a lot of gains and get out. But what I see with XLE, besides a sharp drawdown, 50 days started to roll over, bearish 20,
crossing.
50-day cross. And a lot of these energy charts, you know, Devon Energy, which was a big winner, that's
Yeah.
starting to roll over. If you look at charts like Halliburton, you know, just a lot of bearish moving averages.
25
bearish
to 35% declines in less than a month.
Yes.
In a month.
Yeah. And I think, you know, here's what I think is going to happen. I think if you look at crude oil is starting to roll over. And right now, central banks, there's 19 central banks across the world that are tightening right now. The ECB is just about to get started. Powell's already come out and said they're not worried about a recession. They're more concerned about bringing inflation down. They've got a problem. The Fed has an inflation problem. The ECB, they've got an inflation problem. And these central banks, I think that anyone that expects that these central banks are going to back off because the economy slows down, I think that unless CPI falls off a cliff, I think they're going to continue to tighten. And that's showing up in the commodities market. I mean, commodities have just completely rolled over. Commodities indexes rolled over. Copper's rolled over. You know, when you see these types of moves, if you take a look at these metal stocks like Freeport, Tech Resources, these are all pricing in, you know, either a much slower economy and or a recession. But that's, if you just look at these commodities charts, they'll tell you what the markets are looking for. Now, bond yields are a little bit different because bond yields pull back. But the problem with bond yields is if inflation stays high, it puts upward pressure on these bond yields. So the bond market
look at where they held, Larry, right at the same May lows, near the May lows.
274, 270, 272. The bond market right now is stuck in the middle because if inflation stays high, then bond yields stay high. If we get a slowdown or a recession, then bond yields come down. But right now, I think the bigger concern for the markets is inflation until CPI comes down.
Okay. Yeah, it looks like we could, you know, shoot up, maybe get another high out of this.
I've got to tell you this. I do think it's going to be tough based on, so here's what happened. So when the Fed announced June 15th is when the Fed hiked by 75 basis points. So June 15th on the chart, exactly right. And then from there, so maybe there's a short-term bounce in bond yields if inflation comes in. But I think that eventually you're going to get lower in bond yields. I don't expect bond yields to make a new high. You know, I could be wrong, but I think it's going to take a lot of, I mean, inflation would just have to be, you know, through the roof again for bond yields to make a new high.
Maybe a right shoulder, Larry. What do you think of that?
Could be.
You know, you got that left shoulder in May, the head in June, and we develop a right shoulder in July.
I've got a small position. I just started a position in TLT, which is long treasuries, and it's a starter position for me. It just closed over the 50-day for the first time going back to December. I do think that TLT in the near term could have some downside pressure next week if the CPI comes in high. But I don't know that I think that there's going to be enough movement there to make lower lows. So I've got my stop below this recent low. And I'm just betting on the fact that bond yields won't make a new high. But I could be wrong. You know, you can be wrong with anything. So it's a small starter position. I do expect to have some pressure on me, but I do think that, you know, 2-3 months from now, I think that bond yields are lower and I think TLT is higher.
Okay. And you know how Kramer says there's always a bull market somewhere. Could
Yep.
it be embryonic since biotech was getting crushed way before the general market, something with LABD or anything like that? That's acting pretty good. LABU, I'm not sure exactly
You know,
what B is. But
it
go
could
ahead.
be. It could be, and I had biotech on my list to talk to you about today. So what
Oh,
I'm
see?
looking at, so
I'm a mind
Argenx,
reader.
yeah, you are a mind reader.
All right.
Argenx made a new high. So I've had this on our high beta list for about 3 weeks now.
Yeah.
VRTX, this is a recent chart of the day idea. That's setting up well. So XBI overall, XBI, it's on my radar screen. I haven't done anything yet because I'm still not sure. Here's the problem. So XBI looks good from, it had a high volume selling washout and a reversal here. It's had a lot of high volume coming in, bullish moving average crossover. All of this is very constructive. My only concern is last month when the CPI came in high, XBI went from 74 to 62, you know, on a shot. So if what I want to see next week is if CPI comes in high, does biotech have the same type of pullback that it did with the last C? But I will
like
say
the
this.
index is making a new high and this puts in a higher low, maybe back near those moving averages where they're crossing.
Of the 11 S&P sectors, the healthcare sector is the #1 ranked sector on my screen. And it's mostly, we looked at Vertex, but if you take a look at stocks like Eli Lilly, I mean, look at that in a vicious, you know, bear market. Eli Lilly put in a high yesterday. Merck isn't too far off. And the reason is if the economy slows down, healthcare is considered, you know, very defensive, but it's also got some growth. So consumer staples and real estate and utilities tend to do well in a slowdown, but there's really not a lot of growth. You know, there's not a lot of profit margins in consumer staples, but the healthcare sector overall is set up the best. And yeah, XBI is on my radar screen. It's very possible that the lows could be in here. That's definitely improving. It's got some nice volume coming in.
How about if you're right for longer term yields to be dropping, you know, even with the CPI report, you would think that would be supportive of the housing stocks?
The only problem with the housing stocks is my best case scenario is we're definitely going to get an economic slowdown. And there's a very good possibility if you just follow the technical definition of a recession. And, you know, people like to debate it. We could spend all day debating what's a recession, but a classic definition is 2 quarters back-to-back negative GDP growth. And right now, according to the Atlanta Fed, we're there. So I don't think we get GDP until the end of July. But lower yields are good for housing stocks. But if the economy rolls over, I think housing stocks are bad.
Okay, after the Fed meeting in July, they don't have one in August, right? They won't have another meeting till September?
Yeah, September 21st. And that's another reason why, you know, they've got one chance between now and September to try to put the lid on inflation. And that's why I really think that with only one meeting, they're going to go 75.
Okay, and maybe September it's less than 75.
Could
because
be.
maybe some of these commodity prices filter into that number and they go 50 maybe and starts slowing down their tightening process.
Yeah, I think you're right on the money. Right now, I think we can get a decent idea where we're at, but I mean, what happens between now and September? No way to know. I think that inflation should hopefully come down by September because there's a lot of tightening. You know, oil's coming down, commodities are coming down, so hopefully they start to get it under control.
Yeah, you know, a lot of people they talk about, you know, when the Fed flips, they think that they're going to go, you know, there'll be something breaks and they're going to go from tightening back to QE, but I believe there's going to be at least a transition step of less tightening or pausing and not just going into reverse. Don't you think that's more plausible?
Yes. Yeah, from what I've seen in the Fed Fund futures market, I think the first hint of any type of rate cuts is like the middle of 2023. Now, keep in mind these markets move extremely fast. The data comes in very fast. CPI could fall off a cliff, the economy could slow down. But yeah, I don't know that with CPI at 8% and the Fed funds, at 175, I don't know that they're going to. I would highly not expect them to cut anytime in 2022.
Okay. All right. So,
But that it could all change. All we can really talk about is what we know right now. But I think that inflation's the bigger problem right now.
okay. So, any view on this extremely strong dollar?
I don't follow the dollar too much because there's so many
UUP.
factors that are involved with
Yeah.
the dollar that, the way that I look at it is if I can't be very, very proficient at it, I don't, talk too much about it. So the only thing I can say about the dollar, obviously, it's in a very, very strong uptrend. But that's really all I can say about it.
Okay. And you like China. They're the only central bank that's still in an easing mode. They may not get the same bang for the buck, but at
They
least
just started to ease. So
Yeah.
I started a position a few weeks ago, and this is a starter position as well. So
Yeah.
China Internet, which is the KWEB ETF, and the key
Right.
thing, very, very high volume reversal in March. Now, obviously, this is a lot more speculative, but if we take a look at the way that the moving averages are developing, so you've got an uptrend, higher highs, higher lows, rising 50-day moving average. It's testing below the 20-day. They've got some issues with maybe COVID again. But if you
Yeah.
take a look at the China A-share market, that's been moving pretty nicely.
Real
Alibaba
nice.
is I believe
Yeah.
the largest market cap. It's either Alibaba or Tencent. But if you look at the BABA chart, it's coming out of a stage 1 base. Moving averages are
On the
turning
verge
higher.
of a breakout.
Yeah, exactly right. Just below this 200-day moving average. And, the KWEB and Triple Q really diverted from each other. So last year when Triple Q was making new highs, these China internet stocks were making new lows. So it's very possible, especially with the central, the PBOC, they're easing. So it's a starter position for me in KWEB. If it starts to work, I can always add to it. But this is, along with biotech, I'd say these are two higher beta sectors that are showing some signs of life.
Okay. Anything you want to wrap with, Larry?
No, that's about it. Really, the key thing is I think that, we have to adapt to what's happening in the market, but from a risk management perspective, with everything in a pretty strong downtrend, I think it makes more sense to be defensive, expect the bad news. So if the bad news comes in, and that could be high CPI, if we expect the bad news and we're prepared for it, you generally don't get caught off guard and lose a lot of money. And then if the news comes in great, then we can get more aggressive on the upside.
Okay. And the best way for people to follow and your work, your website?
Two
Wanna show
ways.
that?
Thank you for asking. So on Twitter, my handle is @LMT978. I post quite a bit through the day, and almost everything I post is just technical and about the stock market. I keep it very stocks, bonds, but just on the markets in general. I keep everything very focused. And then if you want to find me on my website, so my website is bluechipdaily.com. We've got a 30-day free trial so people can find out exactly what's going on. And then if you go to our home page, you can see just some of the most recent market calls. We started a position in ERY on Friday, and that was up, 10% the very next day. So that started off in the right direction. But for the most part, we've been on the right side of, and you know this because we've been talking for a while, but we've been on the right side of all the major market moves for quite a while now.
Yeah. So, you know what? You're a prime example of if you don't learn how to change your mind, you won't have any change left. WD Gann. And I've been, most of the years I've been talking to you, you've been a steadfast bull, and that started to shift the last time we talked. And it shows that, you know, you're a pro. You don't always have to be long. There are two sides of the markets to trade. And congratulations on some guys just cannot make that mental shift from being a dip buyer to a rip seller. So congratulations, Larry. Nice work.
Dale, thank you. I appreciate it. I always appreciate when you and Blake have me on the show. And I'm looking forward to speaking in a few months and see what happens from here.
Yeah, we'll get back together in the fall, Larry. And thank you so much for being here today, sharing your work and perspectives with our community, my trading warrior brother.
Dale, thank you so much, my friend. I appreciate it, and I look forward to speaking to you soon.
All right, buddy. Good hunting. Good hunting, everybody. Don't just count your pips, count your blessings, and you could join the team in 20 minutes on the morning edge. We'll see you tomorrow for the NFP, and I think it'll be no frickin' problem. So we'll see you then, everyone.